Hey guys, welcome back to Cignals Trading Academy. This is lesson number 3, which is going to go over auction theory. Yeah, now that we've gotten the absolute basics out of the way, just mentally preparing everybody who may be new here, what to expect and how to handle themselves emotionally and whatnot, and then of course getting a plan together so we can get all of our ideas organized and see where our edges lie. Now it's time to learn about what markets actually are at their core, which is what I've been alluding to this whole time. Every market is just an auction. That's all it is. It doesn't matter if it's Bitcoin, any other crypto, or baseball cards or anything. Literally anything. At the core, it's just supply and demand changing hands constantly, right? And essentially, the perception of what price should be, what is a fair price for this item, whatever it may be, Bitcoin, corn, gold, anything. It could be anything, right? So markets are just auctions, and what that means is that they always seek price discovery and balance, right? Like price will always tend to go back to balance after it goes through a phase of imbalance, which we'll get into right now. So let's take a look at this. Okay. Yeah. So, excuse me. So now, when markets are not in balance, right, you see things like this. You see moves like this right here, where markets are in balance until they're not, right? There's a number of reasons things like this happen. The reasons vary quite a bit, but usually it's because new news comes out that affects the perception of fair value, right? Because at the end of the day, in a capitalist system, supply or wholesalers or whoever who's holding the supply are always advertising for best price. They want to make sure they're getting fair value for whatever it is they're selling, right? Like they want to get the top dollar they possibly can. And on the flip side of that coin, capitalism is great because it also brings costs way down, right? So buyers are not going to overpay. They know where their fair value is, right? So that's why you see markets usually trade imbalance at first. And ultimately, when new information arises that affects the perception of value, we start to see imbalance, right? So you have balance, imbalance, and then trends again back into imbalance, a little bit of balance, imbalance, balance. So, like I'm saying, at the end of the day, a market at its core is just an auction, a place for people to gather, buyers and sellers to negotiate fair value and price, essentially, right? Because trading is a zero-sum game. I'm sure you know that, but it's the only way to form a market. Think of it like this: when you go on eBay or whatever it is, right, that you use, like those type of sites, and you have somebody with supply, right, and you're bidding against all of these other people, right, and essentially that's every market, no matter what. And the only reason why this looks prettier, and we're just finding it, we have so much information available to us that we can look at it this way and dissect it a little bit more in depth than you could something like if you're buying something on eBay that you're bidding against 500 people. If we are trading Bitcoin, we know how many traders for the most part we're trading against, because it appears on tape, and we can glean certain information from this cluster, right? So what does that even mean? Well, we have to understand, besides markets being just auctions that are discounting mechanisms and price discovery mechanisms, for where people come together to volley for position, where buyers and sellers try to outcompete each other for best price and ultimately get the market back into balance until something new develops that changes perception of value again. We need to know where value is, because that's how I trade, right? I try to find like edges where I know I'm going to have a 7 out of 10 chance, a 6 out 8 out of 10 chance of winning if I enter the market at that price. So what does that mean? value areas are how we kind of determine that, and this has a lot to do with profile as well, which we will get into in a separate video because I don't want to overwhelm people out the gate, right? So value area highs. If we're just looking at this range right here, let's use the profile. The value area high is right here because it's essentially the top of the range where price is traded out and subsequently been rejected. Okay, and then right down here would be the value area low where price has come into and then been rejected. And usually when markets are imbalanced and then start to trend, we get something like this. See, like value area low is right here, right? We came into that low, and then what happened? We broke slightly below it. You know what that's called? A failed auction. We got down there, tried to advertise for a lower price. You know what? Sellers weren't really trying to continue to sell at that price. They didn't want to take that I guess in some ways, that price, that implied loss, maybe whatever it was, that changed the perception of value, right? And what happened? We came right back into this range, right? Like if we're just using this as an example, came right back into this range and tested the top and ultimately broke for value area high. And when this happens, a failed auction happens, you get that one tick test and you come in, it rejects and comes back out. You have an 80% chance when you breach value area low of price, rejecting once it, you do the one tick test, it comes down, tries, and then comes back up. When you see this happen, there's your 88 out of 10 probability right there, okay? That's called a failed auction and a tick reversal. And what happens is that you basically buyers wanted cheaper prices. Sellers were just not trying to sell to them down there. And you got buyers chasing higher as they realized they couldn't get the prices they wanted. And now they're just hoping to accept prices slightly higher. And 8 out of 10 times when this happens and you get that reversal, you're going back to the top of the range value area high, and you're going to trade imbalance until ultimately it breaks. So, that's how you use auction theory to your advantage if you're trying to look for more, I guess, like higher probability trades. Like for me, I love trading stuff like that because it's the easiest, usually 7 to 8 out of 10 probabilities that you're gonna hit the type of trade you're looking for. So, and it's any market. It's not just Bitcoin. It's every single market. This comes from ultimately trading futures, and this is something that is very reliable in the E-minis. If you ask anybody who trades E-minis or whatever type of futures and their order flow and price action guys or profile guys, they're looking for stuff like this. There's no way they're not, because those are the highest probability trades that there are. And if you understand that at the end of the day, essentially where you are in terms of the auction process, right? And who has control at this point. This is a 4-hour chart of Bitcoin on Bitfinex. It's a spot chart that I'm looking at over the past couple of days just because, I'm more concerned really with the spot market right now. So, when you see something like this happen, you see kind of there's like a lot of volume here. You see how the cluster is pretty lit up on both sides of the stack. Essentially, something happened down here. We got that one tick test of the value area low, right? That's a horrible line, but you understand what I'm saying. And then we came back up into VWAP, right? And then continued to grind to the top of this, 16-hour range, crossed over VWAP again, and ultimately melted up into value area high, right? You understand. The lines are horrible, but you understand what I'm saying. And, from that point, we dropped back down, okay? Again, one tick test somewhere in the low volume nodes of down here, and reversed back into range highs, local highs, and essentially traded in balance ever since. So, these are things. I'm not saying that like this is the only way to trade, but if you're looking for higher probabilities, essentially when you understand the makings of a market and an auction and how that process works, like it becomes much easier once you're familiar with the process of auctions and what they are, how they create markets, how participants come together, and it's all a zero sum game at the end of the day, to advertise fair value, and ultimately it's a price discovery mechanism and a discounting mechanism. So also, in the links below, there will be a link to the glossary on signals. Okay, if the lexicon that traders use in volumetric and order flow trading can get kind of overwhelming, if you're not familiar with like that vernacular. So make sure you go ahead and like and subscribe, please. That helps us out so much. As corny as it sounds. And on top of that, check out the glossary. It'll help you with everything that we're using trader jargon wise. So now let's just take a look at, with that being said, knowing where we are in the auction process, right? So we have the value area high, like in this range right here, or excuse me, like in this range right here. Profile high, so you have profile high. Okay, you have value area high. Okay, you have down here the value area low, okay, and down here profile low, okay. Here we have point of control, the most commonly accepted price, point of control, and here we have LVNs, which are low volume nodes, and here we have high volume nodes. Okay, high volume nodes. So that's your basic construct of where you are in the auction process. And again, when we get when we get these moves, below value area, outside of value, you start to see those tick reversal setups. You start to, like, usually the edges of the profile, LVNs, you always want to be entering into LVNs and exiting into HVNs, because LVNs are areas of the profile or of the auction process in general where, and we're going to get more into profile in the next video. So we'll get definitely more in depth with that, but it's almost like using it synonymously, because the histogram or the profile is just a visual representation of where the auction process is. Because if you've watched any of our videos on that, and you know about profile symmetry, which we'll get into in the next video, you kind of have an idea of who has an edge, buyers or sellers, in the auction process. And ultimately, you want to see that symmetry finish out at the end of it, where that the auction process has completed. So, essentially, as long as you know where you are in the auction process, you know where your edges lie. Again, breaks, those one tick potential tests, and tick reversal tests potentially at value area low or the profile low. If you see like the value area low get cracked and profile low starts to wick a little bit, and then it just starts to melt up, out of nowhere, and it's trying to test the bottom of this range, essentially, like down here, you'll see like it happens, right? It's because if you look, and then, it went down here and just popped right back through at the profile low. It extended the profile a little bit. You probably had one seller just get caught down there, with some excess liquidity, and then they pushed it right back up into VWAP, and ultimately it didn't take long before we got to the top of that range, and ultimately to right here. So, we know how that goes now, and we know where our outliers are for the most part. Feel free at this point to just make this your own. There's a lot of ways auctions play out. Nothing's set in stone. But at the end of the day, if you have a good idea of where imbalance is, like now symmetry, right? Imbalance, balance. It's really what it is. And see, it's entering a new phase of imbalance. And you can see on signals specific signatures, that show you buy and sell imbalance. For example, you have buy imbalances here, and ultimately, sell imbalances here. So you get an idea of when things are starting to get imbalanced to a degree a little bit ahead of time using signals if you know what you're looking for. And we'll do something again on advanced order flow once we that's advanced order flow. So once we get past basic profile, basic order flow, basic price, there's a lot of there's going to be a lot of videos that have to go into this series because at the end of the day, like I said in the first video, there's no magic sauce. There's no bullet that's going to give you the trading career you think you should have in your head within 3 videos, 4 videos. It's going to be a constant learning process, and we'll make sure to tackle as much as we possibly can. So that's really it for now. Please, again, make sure you like and subscribe. We're going to do advanced order flow, advanced auction theory once we get past the basics of the nuances of auction theory, profile, order flow, all that good stuff. So stick with us, like and subscribe. If you have any questions, please feel free to drop them in the comments, or it'd be easier if you just went to our Discord. All the links are below. Hope you guys have a great day and this helped. See you guys on the next episode.